Hi, this is Brian Choi, CEO of the Food Institute, and welcome to the Food Institute podcast. This week, we will be speaking with Winston Song, co-head of consumer at Vestar Capital Partners, on the topic of PE investment trends in the Better For You category. But before we get started, I'd like to ask all of our listeners today to share this episode within your networks. It's a huge help to us, and I want to thank everyone who's done so before. If you are new to the podcast, please follow, like, and share as it extends our reach, and we really appreciate it when you do so. Today's episode is brought to you by BHI Bank. BHI offers full commercial banking services that combine the personal attention and responsiveness of a prestigious boutique bank with the expertise and financial strength of a global bank. For more information, please visit www.bhiusa.com. With that said, I'll introduce Winston. How's it going today?
Hey, Brian. Thanks for having me.
So please share a little bit about your background, Winston, and about Vestar Capital.
Yeah, sure. So I think, as you mentioned, I'm a partner on the consumer team at Vestar. I actually co-head up the group. I've been with Vestar for 14 years and started my career investing in foods with our investment in Bird's Eye in the mid-2000s, and essentially I've been doing it ever since. You and I overlapped a long time ago as investment banking analysts, so you go way back, we go way back. I live in Brooklyn, which I think in my mind is kind of the capital of food innovation, or at the very least, the capital of third wave coffee shops, which brings a lot of interesting things to food, as you know. I've got a young family, and so much of what I do actually stems from finding better ways to feed our kids, and that's how we learn a lot about what's going on in the category. Because, as you know, it's so easy to always just default and call takeout or something like that. So. And then in terms of Vestar, we've been around for 30 years, and we're investing out of our seventh fund, Vestar 7, which is a $1.1 billion fund. And we've been doing, consumer is one of our core industries that we go to market with. We've done, call it 80, 90 investments in our 30-year history, and about half of those have been, consumer and consumer related. A lot of familiar household names that people recognize, like Bird's Eye Foods, Del Monte Foods, Big Heart Pet Brands. More recently, we invested in a company called Roland Foods, which sells primarily in a food service, but you might see a can of artichokes here and there at retail. We're invested in a biscotti business called Noni's, and then two pretty exciting high growth brands that we've done more recently, Simple Mills and Dr Pragers. And I think the way we go to market, or the goal of what we try to tell a lot of our founders and kind of families and management teams, is that our goal in consumer is to really help them build better companies and transform them into strategic assets. And that's really centered on a couple things. So we're a heavily investment oriented firm. I think a lot of firms will come in and be incredibly thoughtful about, how to structure the investment up front and what it's going to look like. And, we know what are the terms of the equity or the debt going in. But, where we like to focus more is what are the investments we can make in the company going forward. So we'll look across all the different functional areas like marketing, new product development, sales, the supply chain, and make sure that the management team feels like they're adequately or overly resourced in all of those, because those investments can really help drive growth. And then the other thing we do is we invest across the value chain. So it's not just brands, right? A lot of firms do a great job investing in brands, and they've got a nice playbook to run. But we've invested in a really nice ecosystem of assets like contract manufacturers, raw material suppliers, distribution businesses. We made an investment in IRI, which is a data and marketing services business, because we know data is incredibly important right now in consumer. And those companies are all set up to really help emerging brands scale much more rapidly and much more quickly. And we really put our portfolio to work to really help out our management teams. And the last thing I'd say is that we are incredibly focused on family and founder situations. That's part of the DNA of the firm. That's something that our founders really, really believe in at Vestar. And, that takes sometimes a different mindset. Not all founders and families are the same. They all have different unique goals and different ways of working with each other. And, so we really focus on listening, collaborating, kind of respecting the culture of success that's been built, and finding ways to kind of work with these founders to really grow their business. And, if you look in our portfolio today, we've got 7 companies where we're the first outside or institutional capital that's been brought in. Some of these companies have been around for 70 or 90 years. So that's something that we're pretty proud of.
Recently, it was announced that Vestar Capital acquired a majority stake in Dr. Pragers Sensible Foods. Dr. Pragers is one of the leading companies in the Better For You food industry segment. Please provide some of the background and context on Vestar's investment in Dr. Pragers. In particular, what attracted you and your firm to this specific company in the midst of the broader health and wellness category?
Yeah, we're super excited about this investment. So it's I'm happy to talk about it. But I think like I mentioned, like so much of what I do is just based on kind of personal consumption habits of myself and others around the firm. And we've been our family has been a kind of a Dr. Prager's consumer since my son first started eating solid foods back in 2015. If anyone else out there has small kids, I highly recommend the Littles product. Spinach, kale, sweet potato, pretty effective and convenient way to get your kids to eat vegetables. Um, but it's a company that we've tracked for a long time. It's in frozen and it's a vegetable forward brand, and we've had a lot of success with the companies like that, like in Birdseye and Del Monte. And it was a closely held family run business with the Praegers and the Sombergs. So it checked a lot of boxes in terms of what we're looking for, and we thought we could bring a lot to the table. And obviously, with I think everyone understands and has heard the buzz about what's going on in plant based at this point. There's a ton of reasons why consumers are moving towards somewhat of a plant based diet. So there's obviously the health benefits, environmental concerns, concerns around animal welfare. So there are a lot of different forces kind of driving consumers into the category. And at least the category is growing at retail pretty significantly, right? So in the frozen category with Prager's plays, it grew 50% this last year. In the refrigerated category, where some of these other brands have really started playing, so in some retailers, the category tripled. So there's a ton of new households entering the category, and you've got a lot of new brands. Private label offerings are also pretty exciting too, like the Trader Joe's protein patty is a pretty good execution as well. Um, but then, as we look through it, we really like the category, and then we were thinking, like, how do you parse through all this novelty, all this innovation? Where should we be investing? And a common thread of what we look at Vestar is investing in brands that we think are sustainable and enduring franchises and have really broad shoulders. And what we mean by that is brands that we think we can expand into new categories and really innovate behind. And there's a lot of new brands out there. On the flip side, Dr. Pragers has been around since the early to mid 90s. And I think if you look at kind of what they're known for, they've got great tasting, they've got nutritious products that execute really well, and they've got a really powerful veggie forward brand promise and a really loyal consumer base. Once you parse through a lot of the consumer data, it's a great brand, but at the same time, it's still it's a mid-sized brand. It's not a massive brand. It's got relatively low awareness and household penetration outside of kind of the coasts, but consumers do love the product and keep coming back to it. So we think that's a pretty nice virtuous circle to really drive growth here once we make the right investments in marketing and product innovation and expanding distribution. The families have done a really good job building the business, and it's our goal here to really accelerate that and really take advantage of what's going on in the category.
As you know, Winston, there are both large public and private heavyweight contenders in the plant based industry category. As an investor, how do you view Dr. Prager's product portfolio in relation to these large competitors?
Yeah, I think it's a couple things. Certainly they've been around for a long time, and their products. It all starts with product in food, as you know, and taste and texture are king in this category, and that's some of the most challenging things to solve when you're not, when you're trying to do a meat alternative or even a black bean burger, and they've done a really good job with that. I think the other part of this is consumers are very health conscious, and if you really look at how Dr. Prager's innovates, their true north is always making sure that they're veggie forward. And so that means that our first ingredient on a lot of our products are is a vegetable. That's not always the case for a lot of the other kind of products that are out there. But I think that really does mean something to the consumers. So you've got a better ingredient label, you've got great tasting products, and they've also been able to innovate across a number of different categories. Like I said, there's a lot of new people coming into the category here. You've got vegans and vegetarians who have been consumers for a long time. You've got kids, you've got flexitarians or reducitarians that are coming into the category, and they've innovated a pretty exciting product line that can kind of meet the consumer anywhere along their journey of kind of developing a more plant-based diet.
Are you concerned by competition or by the plethora of new up and coming startups with similar products?
Yeah, I mean that's certainly something we've been tracking, and I think it's such a new category. It's gotten a lot of buzz here that there's plenty of space, and I think that it's one where the consumer trend or the rising tide of kind of consumer demand for these products are going to lift all boats. I think there's a lot of different places where Praeger's plays or along kind of traditional veggie burgers and plant-based, and I think there's just tons of room here for growth across all of it. This is an area that retailers really believe in. Consumers who are coming to the store for these products typically are typically our demographic that retailers want in their stores. It's young families, it skews female. These are the shoppers that spend more in the store and obviously are incredibly loyal. And so I think there's a lot of opportunity for a lot of different brands. And I think the other great thing that's going on right now across, us and a lot of our other competitors is also just kind of what's been going on the food service side. It's not been, it's, obviously the retail is always where a lot of people are focused, but food service and QSRs has been a great way to drive trial. And as people get more comfortable with and understand that these products taste great, they're not like cardboard or mush or anything like that, but they really taste great and it's something they want to incorporate in their diet. It's driving more people to the shelves as well. So right now, I think it's a little bit of a land grab, and I think I think products that execute well, that deliver on nutrition, are gonna do well.
As a follow up question, currently plant based represents only a small percentage of the overall market, whether you're talking about meat products, milk products, etc. What do you think is a steady state percentage of plant based when you look out 5 to 10 years? Is it 5% of the market or 10%?
Unclear exactly where it is. I think there's definitely a pretty high ceiling here. You look at what's going on in dairy and across dairy, or you look at what's been going on the beverage side for dairy. So it's not just kind of cheese or whatever else, but just like milk alternatives as well. There's a ton of upside here, right? And it's also just in general, there's a better for you element to this beyond just this is a meat alternative or whatever. So I think as people start incorporating this more in their diets, I think there's an opportunity for pretty significant penetration here. And you have to remember it's playing across categories too, right? You got frozen, and you've got refrigerated as well, and probably at some point it'll go fresh. So there's a ton of opportunity here and a lot of different channels to penetrate. So I think low single digits is just really low right now, and there's just a ton of upside.
In October 2019, Vestar announced a minority stake in Simple Mills, a clean label baking mix and cracker brand. What was the thought process behind this particular investment?
Yeah, so Simple Mills is pretty similar, right? Like I said, it's a lot of it is based on our own consumer usage, and it's a brand we've been following forever. And chocolate muffin mixes was a great rainy day activity for me and the kids when it was pretty easy to make. Kids like chocolate, so that was kind of my introduction to the brand. And we've been tracking the performance of the brand since then. It also helped that Simple Mills was a client of Presence, which is one of our portfolio companies. Presence is a sales broker in the national organic space, and really helpful when it comes to really helping brands grow in that space. And I know they had a tremendous amount of respect for Caitlin and what she did with the brand there. And one of the things we haven't talked about here is on the consumer side, especially in better for you food, authenticity really matters, right? And that's what got us excited too. So Caitlin created Simple Mills not because she wanted to build a better for you food brand in Behemoth, which she ultimately did very successfully, but she wanted to address a health need that she had. And there's plenty of articles out there that talk about Caitlin, the origin stories for Simple Mills, but she wasn't eating right with a busy schedule. She was on the road a lot, and she just wanted to make something better for herself. And ultimately, she created baking mixes, and then with a powerful innovation engine and a really good team with her, they innovated into crackers, and now they're the leading cracker in the better for you food space. And they've got an exciting cookie. They've got a bunch of exciting cookie offerings. They've gone into bars, but when we met with the Simple Mills team, we just thought the sky's the limit here. One of the brilliant things that Caitlin did here was choosing the brand name Simple Mills, and we think that brand name can carry into a number of different categories if that's where we want to go. But between that and the performance of our products and how great they execute and taste, and the white space opportunity in a bunch of different retailers, we just thought there's a ton of opportunity there. So we were very fortunate that Caitlin chose us as a partner for her, and it's been a really really great ride over the last year and a half.
In hindsight, the Simple Meals investment was perfectly timed with COVID about to hit the world stage a few months later. Currently, with multiple vaccines already being distributed and folks returning back to, quote, normal life, are you concerned about the waning consumer's interest level in baking and stockpiling snacks? Please explain.
Yeah, good question. That's a question that we talk about all the time at our investment committee every Monday, not just specific to any categories that we play in, but whenever we see a company now, that most of the companies out there in food performed really well in 2020. It's like, what is the normalized level of revenue growth or sales or velocities, or what does that really look like? And some of them also had some pretty impressive margin growth as well. And I think ultimately none of us really know what the new normal is going to look like. Um, and that kind of uncertainty is really factoring into how we're strategically planning for our portfolio companies, right? So you've obviously got, optimistic views on the vaccination rollout and what that impact might be, but you've also got a more permanent work from home culture that might happen too. People, I think in general, when you do employee or employee surveys, I think 80% of them are saying at least they're gonna go to partial work weeks. And we definitely, across our portfolio, a lot of companies benefited during the pandemic, and we were bracing for a bullwhip effect, and that kind of never really happened. And so, the challenge that we're giving management teams today, and what we're working with all of them on, is you're way ahead on trial and household penetration than you probably thought you would be by the end of 2020. And how do you keep these consumers in your franchise? Like, how do you market to them? How do you continue to innovate and communicate with them? And then how do you work with your retailers? So I think more than anything, COVID just kind of highlighted where people really need to be focusing for their portfolio companies and their operations, right? You got to shore up your supply chain. You got to make sure that you're selling in the right channels. I think companies that figured out e-commerce also were much more successful. So that's where we're placing a lot of bets as well. But I can't tell you where baking will be next year or the year after. I hope it stays. I hope it stays here. At these elevated levels, and I hope there's a lot more growth. But the other beautiful thing about Simple Mills is where we've got really exciting products across a number of categories. So I think that's baking is just a part of the story.
In the health and wellness space, besides plant based and clean ingredient snacks and baking mixes, what are some of the other major trends that you're focused on?
Yeah, I think certainly, there's always a ton of diet trends that come and go. One that we are spending a lot of time on is no low sugar. There's been a ton of interesting opportunities that are out there. I think there's been also been some pretty interesting investments that others have made more recently in the space. And obviously, and when you look through a lot of the different diets that have come, that's taking and some of them have been in fad, others have not, and they've really some of them are in vogue, and we're really trying to avoid fads. But when you parse through a lot of the different diets, cutting sugar out is a core part of almost all of them. So that's something that we are spending a lot of time on. But we're also spending a lot of time on consumer behavior trends, right? Like, so snacking at home is up significantly during the pandemic. We think that can probably keep going. So we've got companies that play in that space, and there's plenty of other interesting opportunities are coming. Millennial household formation is still a big big macro trend, and there's certain categories that generally benefit from that. Obviously baby and juvenile, but we're also frozen is typically a category that millennial households purchase frequently. We've got our bet in frozen, but we're always looking for more, and we're spending a lot of time on pet. You just look at kind of pet adoption rates or pet ownership rates and how much that accelerated during COVID. My kids weren't allowed to get pets, but they've been clamoring for one. But it's a space we know pretty well from our time at Big Heart, and there's between that and just global growth in pet food, you look like the Chinese market's growing like 25-30% a year. It's a massive market. There's a lot of opportunity, and probably the last one I'd highlight is just ESG matters, right? So we're looking for brands that that do promote ESG in some way, shape, or form. It's very clear that consumers are demanding this with their wallets, and they're gravitating towards brands that promote sustainability either through their supply chain or packaging, or promote diversity. So minority or female-owned brands are getting more attention from consumers as well, and retailers, as they should. So we are focused there as well.
And our last question, how has COVID changed your outlook on the food industry, if at all? How has your perception of risk and reward changed as a result of the pandemic?
Yeah, I think the one thing that COVID demonstrated to us about the food industry, particularly food at home consumption, is just how resilient it is. Right? I think people were pretty concerned early on, and obviously the supply chain. There's always work to do on there to make it safer for the folks that are coming in and out of the plants. And we've made sure, or we've done our best across our portfolio, especially those that own our own manufacturing, to really try to take care of our employees there. And then I think our management teams have done a great job. But if you look across kind of just public valuations for kind of the big food companies out there, they're up 25% plus since kind of the height of the pandemic, right? So that just demonstrates kind of how investors are really thinking about food and thinking about it as a bellwether. So I'm not quite sure my perspective on risk reward has really changed. There's obviously different pockets that have done better than others. So obviously, away from food consumption has been more challenged. It is a matter of time probably before that comes back. Categories like bars, which were kind of on fire for a long time, and a lot of people had a lot of success investing in bars, as did we with Hearthside Foods. This past year, not so much, because people have stopped eating on the go. But I do think convenience and eating on the go is probably still a trend for the long term that will certainly be durable. So there's certainly a ton of opportunity there, and I think our perspective here is always, not really thinking more so on just what absolute valuations look like, but just making sure that we're thematically investing behind categories and opportunities where we've got a lot of conviction. I think the other thing that COVID has really highlighted, and we talked about it a little bit, is just certain aspects of the business model is just going to change, right? So e-commerce penetration and kind of is way ahead of where we thought it was going to be. I think we're at like 2024 forecasted levels versus kind of where we thought we would be at the end of 2020 or 2021. And Instacart and Walmart.com and all these apps got a ton of, like, basically doubled in downloads this past year. So having our brands and our companies really understand how to play there is going to be important. There's, for a lot of these new brands, people used to lean on demos a lot, right? But demos are obviously going to be a little bit different in the post-COVID world, and you're going to have to think through other ways to drive trial. I don't have all the answers to that, but that's something we're totally focused on. And then obviously we talked about supply chain questions, right? But in terms of just, do you outsource? Do you own your own manufacturing? How do you keep your employees safe? And how do you make sure that you have enough capacity to really service these retailers that are more and more demanding in terms of OTIF rates? Costco is ordered in bulk for a lot of big brands, and that strained the supply chain, but they were very good partners to a lot of our portfolio companies at the end, and we're understanding. So those are just some of the challenges that these companies faced. And, I think, and those are questions and strategic goals or initiatives that our management teams are going to need to look at going forward. But again, when you just look at where companies are trading and how they performed, I think people's perspective here has always been, food and consumer in general is a staple, and it's going to perform well regardless of what's going on in the world.
So that about wraps it up for this edition of the podcast. I'd like to thank Winston for spending time with us today, and also BHI for sponsoring this episode. Remember, if you're new to the Food Institute podcast, please follow, like, and share. If you'd like to learn more about BHI, please take a look at the links in our description. Until next time, this is Brian Choi, signing off.